Hello traders and welcome to another video review. Today is Tuesday, October 25th, 2022. Let's find out what is going on the Forex calendar. During the overnight session, not too many interesting data had been released. However, during the London session, we got data from the Germany in form of the Ifo Business Climate Index. So this data is very much expected by the market participants. We got three sub-indices: business expectations, current assessment, and business climate. As you can see, the most important is the business climate index, and it's this kind of index is expected to deteriorate from 84.3 points to 83.3 points. So we will definitely take a look. At the euro dollar today. Data from the United Kingdom today only in form of the CBI Industrial Trends Orders, and we have a speech of the Bank of England MPC member Pill. Please remember, there is a new Prime Minister of UK. Right now I forgot his name, but he was elected yesterday basically from the Conservative Party, so maybe that information might spark some sort of the bigger interest in the British pound. We will find out. And during the New York session, we have the most important data regarding the consumer confidence. Consumer confidence data scheduled for release at 4 p.m. are expected to deteriorate slightly from 108 points to 106.5 point. We have the speeches from the Treasury Secretary Yellen, and then Fed Weller will give a speech as well. At the end of the day, we got API weekly crude oil stock reserves. This data are important for all of the crude oil traders, are scheduled for release at 10:30 after the trading session is done on the trading floor in the stock exchange. So this is the situation of the Tuesday's calendar. Let's find out what's going on the charts, and we are going to start with the euro dollar because of the data from the Germany and some data from the US. For our chart of the euro dollar, looks very promising for bulls. However, as you can see, the recent bounce from the trend line and then recent bounce from this kind of a pin bar here made around the level of 9,700 is not really impulsive because there is too much overlapping waves. We had just 8 hours ago a test of the recent local high located at 9,901. And you can see this small bearish engulfing pattern here. So first we have a pin bar, and then we have a bearish engulfing pattern. So bearish activity here is very high, and the bears are preventing basically the market to rise and bulls to rally higher. So that's a very important level right now. It's been tested already, so market recognize it, and possibly the bearish and bullish activity should be bigger around this level. So we got 9,901. What can we say about the support? The support, the intraday support is located at 9,835 and 9,811. Those are daily supports. Once we bounce from this support, and we are very close to 30 periods moving average as well. It's just in between these levels, so please watch this area for a potential bounce. And then of course maybe there will be a breakout. However, as you can see, momentum sharply tuned to the south, so any kind of a breakout of the support will likely result of the test of the trend line in the nearest future. So that's the euro to the American dollar. Let's find out the euro to the Japanese yen. We have not been watching this market closely for some time because I wanted a little bit pause for the trend to expand, and as you can see, we have this situation much more clearer right now. We are moving inside of the channel. Daily time frame chart shows us that the market is above the 30 days moving average, located right now at 143.2 pips. The level of technical support 144 and 19 support, so I would change it to green. There you go, had been tested twice. We got very unusual activity here around 148. The local high was made at 148.34, so it's around let's say here. There you go. Big kind of a pin bearish, kind of a bar daily time frame chart candlestick that shows us that market is not sure where to go. Should they continue the up move or not? And then of course we have a test of the technical support and bounce right back up. However, I would like to point out that there is a bearish divergence on the daily time frame chart between the price, which is making new higher highs, okay. The previous was 145.57, the nearest one is 148.34, and of course the momentum indicator, which is, as you can see, moving of course lower. Momentum is showing that the bulls hit overbought market conditions at the level of 70, and now they are going lower. However, during the recent rally, this momentum was at the higher level. So we have clear negative divergence between the price and the momentum. So we should expect this market to at least consolidate here or break below 144.19. This might be very severe. There might be very severe consequences if we break below this level, because this is very important technical support, and if that will happen, then the next, of course, technical support is 142.28. Okay, then I can point out a little bit more of the technical support, like 140.83, and we got one more around the level of 138.31, which is just above the trend line and just below it as the pin bar ends around 137.35. So please keep an eye on the current market developings, because it looks like the negative divergence might cause a sell-off. What do we have here? Of course, what do we have here is typical for all of the Japanese yen markets. So let's switch to the US dollar to Japanese yen. This is daily time frame chart, and there is our target hit. So well done everyone for following this scenario. As you can see, perfect hit of 61% of the extension of the wave 3. However, after the Bank of Japan intervention, we have a very fast decline. Let me just switch to 4-hour chart. There you go. This is the central bank intervention. So there is target hit. We got even a high around the level of 151.96. So this target is no longer valid, because it looks like the market had completed the 5-wave sequence to the upside. So right now we should expect some sort of the correction. Nevertheless, there is no negative divergence here apparently between wave 3 and wave 5, which is a pity. However, the market is telling us very clearly there is a big drop. High was 151.96, low was 146.22. So that's over 500 pips already. So please notice the fact we might be done with the upside, and whole of this sequence, as you can see, 5-way sequence might have been completed at the level of 151.96. Right now we should start the corrective period. So we need a correction, and where the correction can lead us, as you can see, the low of the wave 4 is around 140, and this is the typical target for the correction. So let me just point out this target here. This is the typical target for the correction. What is the usual form of the correction? Is of course the ABC, the most popular one is the ABC to the downside. So that's our scenario. The previous one, 5-wave advance to the upside, worked perfectly. Our target was hit, and then we got sharp reversal. Well, Bank of Japan helped a little. However, it was still a valid scenario. Now we will follow ABC to the downside in order to follow the basically developing and the progress of the simple corrective cycle, maybe zigzag, maybe some sort of the other corrective, simple corrective cycle, ABC, of course. So please keep an eye on the US dollar to Japanese yen. It looks like we might start the correction anytime soon. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.